How is your company well positioned to protect investors' returns from inflation? And I'm going to ask that question to Giles.
Thanks, Annabelle. How are we positioned to protect investors from inflation? Well, I think the simple answer is we've been doing it for the last 15 years. Our dividends have grown by 2.5% per annum, which exceeds inflation over the last 15 years. But of course, the future is a different thing from the past. So the reason why we're confident about inflation protection in our assets is because of the nature of those assets. We invest in public infrastructure. So these are the essential assets of communities, schools, health centres, courthouses, train services, and so on. And the reason we're confident about inflation is because the revenues we receive are generally inflation linked. It's not a perfect match, but around about 70% of our revenues are inflation linked, such that for every 1% increase in inflation, we expect around about a 0.7% increase in our returns.
Thanks very much, Giles. That's really clear. Andrew, how is your company well positioned to protect investors' returns from inflation?
Well, we hope we're well positioned. We're going to find out in the next year or two. So when we set the business up 5 years ago, we thought there are two important principles we wanted to have in all our leases. So first is long term. Typically, we're putting new leases in place at 25 to 30 years with no break clauses. And second, inflation linkage. So 100% of our leases today are inflation linked. But coming back to something Giles just mentioned, I think it's also very important. You can put anything you like in a lease or a legal agreement, but will it actually work in reality? And our tenants are providing an essential social infrastructure, and they demonstrate over the last 20 years that they have a lot of pricing power in an inflation environment, which we're now in.
Excellent, Andrew. Sounds like you were planning well there in advance for an inflationary environment. Ed, how is your company well positioned to protect investors from inflation?
Yeah, it's a good point, and I'd echo a point that Giles made at the start, which is that when it comes to inflation correlation, not all infrastructure assets are created equal. So it does really require an active approach to portfolio construction and to achieve that inflation protection for investors. So for HICL, inflation protection is one of the key 4 metrics that we target when putting together this diverse portfolio of essential infrastructure together. And in particular, when we make new acquisitions and disposals, what are the key metrics that we're looking at? Inflation's a key one of those. So the 4 key metrics being return, yield, inflation correlation, and weighted average asset life. Now, HICL has an overall portfolio correlation of 0.8. This is strong relative to the peer group. And it means that if inflation was 1% higher in all future periods, then the return that investors could expect from HICL would increase by 0.8% or 80 basis points, all other things being equal. Now, given current market conditions, I'm sure investors are also keen to understand what more severe, shorter-term scenarios look like. So we've provided some of those sensitivities in our recent results. They're available on the website. But to take an example, if inflation was 3% higher than our assumption for 3 years, then investors could expect that net asset value of the company to increase by 10 pence rather.
Thanks very much, Ed. Well, very important in this current high inflation environment. It's quite reassuring for investors to hear from you.